Hey everyone, it is Nathan Graham, that house guy with eXp Realty, and welcome to what is real estate education and training. Hey, listen, this is our Market Monday update for March 18th, and I want to dive right into it, keeping these a bit shorter, hopefully. Okay, so let's take a look at the quick news. First and foremost, I apologize for no update last week. One of the troubles of living with a country property is field mice have a tendency to eat through your internet cord, and you lose internet for a while until Bell Canada comes out and fixes it, or Rogers, or whoever you're with. Okay, so the last 2 weeks, we have seen kind of just, it's been a very healthy market. It's been good, steady rises, and here are all the reasons behind it. So first and foremost, national home sales are up 20% from February over February from last year. Now, a couple of key things to keep in mind. Last year was a slower market. We were seeing downturns, so we are going to see some crazy, like over the next few months, we're going to see crazy this many more sales. Back up. Remember, we only had like 66,000 sales on our board last year, which is very low. It was like a 15 to 20% decrease in actual sales. So we are naturally going to see these start to go up a lot more. But more importantly, so we are seeing a lot more sales in February. Now, from January to February, we saw a little minor decrease when seasonally adjusted. The overall was more, but the seasonally adjusted decrease, we saw that come out. And the national home price was up last month, 3.5% compared to the year before. And that's kind of one of the key points I want to touch on as we're talking about this. Now, if we remember last year we had a very strong January through June, and every month it kept getting stronger and stronger and stronger and stronger for sellers. And then in June, we saw a market increase, a interest rate increase, and we hit a wall, and then that was that, right? So I do want to say we're not necessarily looking at that sort of scenario. But the fact that we have more sales now is kind of a sign that our market is stronger than last year. And last year was not a bad market at this time. So we got to keep that in mind. So let's take a look at what those numbers actually look like. Here are the sold stats. I have January up because we're going to talk about January. But for this month, so we see Oshawa, for example, the average is 831. Ajax, we breached 1 million. Clarington, 895, and Pickering, 982. Now, when I compare these to the month before, pretty much across the board, the average sale price, with the exception of Pickering, is up, and we'll talk about why in a second. The average sale price is up, and especially if I compare it to January, we're definitely seeing a heightened average sale price all across the board. Pickering, by the way, they just finished a massive housing project, and they are massively building homes, which is what we really need. So that's why I think we're seeing the prices stabilize there a bit more. Yet, what the key thing, I want to indicate on here is average prices are going up. You know what I forgot? I forgot to put in Whitby, because Whitby is also, historically, Whitby has been more than, Whitby's higher than Ajax. And if I go back to February, we hit the $1 million January. So Whitby's been in that $1 million mark the whole time. So again, we're kind of seeing more of a stable market. I did the quick stats in Oshawa, for example. I just like to use Oshawa because it's easy and we have a lot of sales. It's up roughly 5% from January. So as a home buyer, what this means for you is every month you're waiting, home prices are getting higher and higher and higher. Now, practically, this is what we're seeing in the market. I just helped a first-time home buyer buy a property. And what we saw in the market was when we first started the house hunt, we were looking at semi-detached homes and condos, and they were just sitting kind of stable. The next week, we started seeing multiple offers creep up again, and more multiples. They were getting 5, 10, 12 offers on anything that was, say, below what the market value should be. So we are seeing that multiple offer market happen. The other thing that we ended up settling on in the condo world is that when we first started looking, there was a lot of inventory that was out there. And by the time we bought, which was just about a week and a half later, that inventory was really shrinking. They started all selling because we started seeing buyers get back into the market. So this tells me that that market is beginning to heat up. Now, as we travel north to, say, Lindsay, or to the rural areas north of Port Perry and all the rest, that market, again, we're not heating up with the multiple offer market. Lindsay might be an exception to that because they have some cheaper housing. But in the rural places, we're not seeing a multiple offer market, yet we are seeing them retain their value. Like I just sold a property that we didn't get a lot of showings on, but open houses were very big. And it retained its value as people are willing to pay the price when you find the right people. We're just not necessarily getting 30, 40, 50 people through the door. So as we start to head north, that's one of the things we're beginning to see. Now, I want to piggyback on that quickly and divert a bit for some real estate advice. If you are thinking about selling anytime soon, open houses are something crazy right now. Like a lot of realtors don't want to do open houses. A lot of clients don't want open houses. They think it's just the neighbors coming through. Yet the last few homes I have personally helped in the process of a sale, the buyers have come from open houses. For some reason, agents don't want to drive, or realtors don't want to drive out to go see a property with their clients. They're just sending them to the open house. So a lot of cases, we're not actually seeing the exposure of a property without open houses. So make sure you are looking at open houses. And buyers, same thing, like actively get out there to open houses. They're fantastic. Or call your agent and get that private showing, and maybe you get the jump on it, right? So that's another important factor. And there are some deals and some jumps to be had there. I just quickly want to jump into the bond market because we're seeing a few interesting things there. So here we're looking at the 5-year bond market. I'll explain why in a minute. Where it's higher. If I go to on a 5-day chart, we actually see this increase. We got as low as 3.3 some odd. That's 3.4. I guess is more than 5 days ago. But now we're sitting at 3.6. And that came out because of strong American economic data. And inflation is just being really stubborn. Please stop buying things that you don't need. That's one of the easiest ways to start curbing this inflational factor. But either way, that's why we see bond rates up. Now, this isn't really affecting the 5-year fix, though. Like the 5-year fix, we've seen this chart now for since December. And it's been kind of lower. Like the 5-year fix, we're seeing about 4.79, 4.89. Now, I want to share with you, though, that these numbers aren't necessarily reflective of what you're able to get into the market. So a lot of clients are kind of asking, do I go variable? Do I do a 3-year? Do I do a 5-year? Do I do a 2-year? Whatever that looks like. Right now, I'm saying a 3-year fixed. That's what I personally signed up to on my mortgage, was a 3-year fixed. They were sitting around 5.5, 5.4 for who knows how long. And I just had a client get 4.84 on a 3-year fixed, which is absolutely crazy low. This tells me when we start to see rates coming out this way, and it wasn't just with one bank, they got this rate, and then their bank that they're originally talking to was like, oh, we'll match that. So it wasn't just like it was like a one-off. And these are major banks we're talking about. We're not talking about mom and pop lending down the street. We're talking about major banks like CIBCs and Scotias and BMOs and everything else. So what we are seeing is banks seem to be aware that interest rates are going to go down here sooner, because this is what happens when we start seeing the deals. So right now it's a fantastic time to protect yourself, get pre-approved, get locked in at those lower rates that we're seeing. If our market shifts and we have a bad inflation report and those rates go up, you're protected. And if the market does what we think it's going to do, you can always get the lower rate at another time. So please, 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 on the buy side, get pre-approved. And these interest rates are going to dictate everything. I'm still kind of vying for April. People think I'm nuts. I know June, they're talking about lowering it. I still think April. I'm still stuck on that one. I could very well be wrong. But the second we start to see those rates lower, it's going to boost our introductory, our first-time home buyer market, which will then boost our next up market, which will boost all of our country properties and outer markets. So be prepared for that. So please, if you have questions, scan the QR code. You're going to notice I added a link for rent to own. If you have questions about rent to own in there, because maybe breaking into the market, you're not getting approved by the bank for what you're looking for, we have rent to own options. And I have a new form to fill out that makes it very easy for us to reach out to see if you're going to be approved. So check that out. Until next week, everybody enjoy. I'll keep you updated on any news that comes in. Have a great rest of the week. Good one.